Good morning, ladies and gentlemen. Welcome back to another pre-market watch list here today. Thank you guys once again for tuning in. As always, I appreciate the support. And to be honest, there is really not too much that I'm going to be watching here today. There might be some things that have changed in the past couple minutes. So good morning to all of you guys. Thanks again for tuning in. So there's not a whole lot that I'm super interested about. There's really only, honestly, I think there's like two stocks that I might watch. Miles, one of which being GE. You're exactly correct. GE is going to be one of the stocks that I'm watching. So we'll talk about that. And then really that was the only one I had some interest in. Then I had a little bit of interest in Skechers, company Skechers this morning. And then, of course, so there's really only two that I'm watching. We'll touch a little bit on the market, and we'll touch on GE, and then we'll touch on Skechers a little bit. But that's really all I'm going to watch. So we should have a good amount of time to maybe look at some of the stocks you guys want to look at. And then, maybe it's possible by the time we get rocking and rolling here that something else will pop up. So let me actually do something real fast. There we go. All right. So well, Miles, to answer your question, whenever stocks get a price target, I never really listen to them that much because they're almost always incorrect. So I really couldn't justify the reason as to why it has jumped the way it has, to be honest with you. To be completely honest, I have no clue, right? So we'll see. We'll see. All right, so let's go ahead, start sharing the screen and get into it. So first things first, we'll start here with GE. So here you go, GE starting to take off even more. So if you're not familiar with GE, I'll give you, So again, if you're not familiar with GE, we'll give you the quick rundown here. GE, you guys know it, a bunch of appliances, kitchenware, things like that. Long story short, for a long time, GE's just been going downhill look at them, just down, 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 down. They finally created this little bit of a bottom here down towards $12, $13. And then today they released earnings, and apparently their earnings is actually pretty good. So that's a really strong sign for a company that's been having negative earnings, bad earnings for a long time, to finally have some positive earnings. That's a good sign for GE. So it's very possible that there's a lot of value investing taking place on GE here this morning. It is popping off. Unfortunately, it looked really good when it was right here. All right, because if it would have stayed right there, we would end up been able to capitalize on that pop in the morning. But unfortunately, it's already started moving again. So we're going through an expansion area, which means we need to go through another consolidation area before market open if we're going to see one of those pops right out of the gates. The higher it goes pre-market, so the higher it keeps going here, the more susceptible it then is to a short out of the gates and then a dip buy. Okay, so let me repeat that. All right, let me actually. Okay, so I'll actually do it like this, do a 5-minute chart. So again, like I said, we just were in a consolidation area, right? And then we just broke out of that, which would have been obviously right there. That was the buy point where all the volume came back in. All right. So now that we're going through this expansion area, we're going to have to see it go up and then go through another consolidation mode before the open to potentially see one of those pops out of the gate. If we don't go through a consolidation or perform into another pattern like you're seeing here in this area, and if it just keeps going, if it keeps going up when we get to the gates, it's more or less likely that we might pop and then dump right away, where we might see a dip buy and then a new long opportunity. So that's the way I see GE playing out today. So we'll see again, right? If you want to look back at a yearly time frame or 180-day, you'll see that we just we're coming up to some resistance at 1535 if it gets there. So the first line of business is to get over 15. So we're right at resistance. okay, right at resistance of the whole dollar mark. So ideally, I wouldn't be surprised to see a pullback or some type of dip buy when the market opens, but do understand we have resistance at 15. And you can start to see some of these sells racking up down here. You can see that down here there's a lot of selling. Look at that. Look at that. Look at right at 15. Can you guys see that? Let me enlarge this. Hold on. I didn't really do anything. Never mind. But you guys can probably see, watch the amount of sells that are starting to come in here around this $15 mark, and look at the buys. Less buys, more selling right at that $15 mark. Does that mean it's not going to break 15? No, I'm just telling you that there's a lot of sellers in that area. Okay. So GE is the main watch for me today. I do want to be long bias on it with the good earnings. Normally, I won't be super long bias on the stock just from good earnings, but considering it's GE and they've been going down for a long time, and this is like their first good earnings in a long time. There you go. Look at the $15 mark. We might break it, but look at all the sells. Oh, it just went away. They were there, now they're gone. But there was a ton of selling. You can see them adding up again. It's pretty even actually. So anyways. Yeah, so there's some resistance coming up, 1535 area. I'd be more or less likely rather see some type of dip. So I'm not going to say what's a good entry, because entries are completely, they change in a matter of seconds, but this is what's going to happen. There's going to be a lot of traders are going to try and buy the breakout above 15, but we already broke that. So a lot of traders are going to be doing the buy above the pre-market high. So what you're probably going to see is if this comes up and it kind of tops out, so look at this, say this yellow line's the actual price action, and say it tops out, or actually that's a bad example. Let me go back. Let me redo that, right? So let's just put it this way. Say this is the price action, right? And it's going up. If it tops out, pulls back a little bit, there's going to be a lot of traders that are going to try and buy the pre-market high breakout above that top, right? So then if the price action comes back around like so, they're going to try and buy right there, right? That's exactly what they're going to do. But you see this rejection candle? Look at that rejection candle, that red candle right there at that $15 mark. So I wouldn't be surprised to start seeing some type of pullback here, all right? So yeah, entry could be above $15. Entry can be above pre-market high. It all depends on what the chart does. So it's very early to say. Entries can take place in the matter of seconds. Setups can take place in the matter of seconds. So when you're considering day trading, to tell someone an entry is kind of like, throw a dart at a dartboard with your eyes closed. Where do you think it's going to hit? You have no clue, right? It all takes place in the matter of seconds. But what I can tell you is there's a lot of traders that would expect to buy the pre-market high breakout, a breakout above 15, or if it starts dumping out, they're going to try and buy on that dip. That dip could be, right? The dip could be all the way down to the pre-market kind of support area, the VWAP. So right in here, there could be a dip buy. There could be a dip buy right here on the previous high of pre-market, right? So there's potential areas where you could buy. It just depends on what happens with the flow of the price action. So that's GE. Let's see, price wise. Now, the next one I was going to look at was Skechers. Skechers earnings, obviously you can tell it's probably not the best. Stock is gapped down from 42 all the way to 32. So $10 gap down, which means there is a lot of room to make to the upside. Does it mean it's going to go all the way back to 42 today? Definitely not. Is it going to go to 36? Probably not. Is it going to go to 35? Maybe. Is it going to go to 34? Possibly. Is it going to go to 33? That's a high chance, right? So again, right, we're looking at this big gap down on Skechers. So far, it's starting to hold kind of around this pre-market low level. So as long as it can hold above this 31.66, I'll be long bias. If it's going to, so ideally the game plan is, if we're going to trade this long today, which I might, the game plan is to get in as close as I possibly can to that pre-market low, 31.66, with a target of each whole dollar mark, 33, 34, 35, etc., on and on. Okay, that's really it. That's the game plan. Skechers is pretty easy. We're literally just sitting on pre-market low support, And that's the game plan, is to possibly trade it long with an entry as close as we can possibly get to the pre-market low. But it needs to stay above it. If it starts breaking through, clearly that's not a support that's staying valid. No, now it's arguable, Matt, right? It's arguable. Now, I'll type this here. Yep, 90. Okay, so read that. 90% of gap downs or gap ups will eventually fill the gap 90% of the time. So if you hold Skechers long enough, sure, it might actually go all the way back up to 42 for you, because technically most gap downs or gap ups tend to fill the gap. So yeah, you could hold, you could try and swing trade Skechers, something like that. But that's 90% of the time. A gap down or gap up will fill the gap. So yeah, you can argue, or it's arguable, that Skechers isn't a bad idea for a swing trade. That's definitely valid. I wouldn't disagree with that. And that's it. That's all it is for GE. Or sorry, that's all it is for Skechers. Bad earnings on some pre-market low support. But it's knocking on the door of this support. And if this were a flip-flop, if this price was going up, this is what we'd call the possibility for a flat top breakout. So as this starts continuing down, I'm becoming more and more short biased, because we're knocking on that door of support and we're still trending down towards it. So I would expect that we might actually break through this 31.66, and then we might go down to test maybe 31, 30. Oh, wait, hold on. Wait, 31.66, right, is the price. 30. So we're at 32. So right here, this is where the price is at. This yellow arrow, that's where the price is at right now. That's the price point. If it breaks that, it's very possible it's going to come down to that support level right there. Okay. That's ideally what I see it could do, right? So we'll see. We'll see what happens. Again, look at this gap, right? So I said 90% of the time, Skechers gapped up a while back from here to here, and it has yet to fill that gap too, right? So you never know for sure if it's going to fill the gap or not, but we'll see. Then let's talk real quick on the market, just so you guys got an overview of where that's at, so you don't get blindsided. So yeah, market, high, low, double bottom. So now we have support built up, right? We bounced. Still, we though are in still a long-term bearish pattern. Right, so ideally we could see this happen, this performance. Or that. Okay. So what was I just saying? Oh yeah, so we're still in a long-term bearish pattern, right? But for right now, it's hard to say, because theoretically, if this is in a descending triangle pattern, like I said plenty of times, the way it would perform is to, go like that, hit resistance, come down, bounce off support, and then eventually it's got to pick a direction, either up or down. So that's just what I'm kind of following right now. So we had a strong bounce and a strong buy off the 50 moving average yesterday in the market. So I would expect that maybe we're going to start getting a little choppy on the market for right now. And if we want to continue up, we're probably going to continue all the way up until we knock on the door of 275, right? If we start pushing higher again, we'll probably have a clean run all the way to 275 on the market. So long bias trades for, inverse related ETFs, not so much. I mean, if you look at the volatility index is super low right now. Right, volatility index is going down, meaning people are not scared the market's really going to crash anymore at this particular time. But give it a few days, give it a few weeks. If the market starts turning down again, we will, in fact, start seeing this volatility index increase again. So that's all I got. So if you guys would like, you can send out some stocks in the chat, and I'll start taking a look at them here on YouTube. Tiny trader, no. Reverse splits actually make the price higher. Hopefully it's a good day in the market. Hopefully. Let's see. I'm kind of just reading through some previous questions. Hold on. Rick, I think right now the price for swing trading, it's overextended, and I would have to get in a dip buy for GE. That's also true, John. I didn't think of that. John on YouTube raised a good point that a lot of people have been shorting GE, so this could cause a major squeeze on GE. That's very true. I didn't think about that. Let's see. Okay, there we go. You could do options. You could do options on GE. Yeah. Jake, what's going on, my man? All right, I'll start from the top. HEAR. HEAR just went through a reverse split. So, but it is trending up. It is trending up right now based off of what the chart's saying. It's not a buy. Based on technicals, HEAR is not a buy. It's actually, well, let me just take a second to think about this. So what HEAR is telling you that it has some high upper wicks. So as soon as it pops up, you're seeing massive selling pressure. All right, if you zoom in here, you'll see that we're getting dojis. So nobody's really sure if they want it to go up or down. So right now it's more of a neutral on HEAR. Price is a bit extended from the 9 moving average. So yeah, I would be neutral on HEAR for right now. It's not really in a particular buy point. If you look at a 180-day chart, I mean, yeah, I mean, it's arguable, but I don't know. Any stock that goes through a reverse split usually isn't doing pretty well, right? So though it's up, it did go through a 1 to 4 to reverse split, which means it's really not that great for whatever they're doing. For whatever reason, they had to do a reverse split, which is not a good sign. AYTU is starting to pop up. This is already getting posted in a lot of chat rooms and a lot of Facebook posts. Everyone's saying AYTU is going to break out, which, yeah, it might run today a little bit. It's possible. But to see some real significant moves on it, you're going to need this volume to increase to that. All right. Back then is when we're seeing some good days on AYTU. And if this is the volume, that, this isn't really going to do much, right? We need the volume on these days to increase to what it was doing on that day or those weeks, right? So we need more volume on AYTU. But if you look at this chart, you'll see that it was performing pretty good, up, down, and yes, we're starting to break out of that trend line support or trend line resistance right there. Okay, so AYTU, how do I feel about it? We'll see. It's again, it needs more volume for me to want to trade it. Day trade it, that is. ATOS. No, won't trade ATOS. What that? Yeah, there's a 1 to 12 reversed stock split. So if you can find shares to short of ATOS, I would say short it. Seriously, I mean, like, don't take my word for it, but I mean, honestly, what is this doing? Yeah. I mean, look at this, right? Have they done? Look at the last time it squeezed up to 159. It came right back down. The price is at like pennies on the dollar. So now they do a reverse split, go all the way to 449. If you have a broker that will allow you to short this, watch it and most likely short it. But yeah, for sure. Let's see. What do we got next? Why don't do that? UMPQ. PQ. $23 stock. Okay. 23. Whoa. What's the deal here? Why is the spread so big? Yeah, I don't get it. I don't know why the spread is so big. The spread is $7. I'm sure that's going to tighten up when the market opens, but if the spread stays that big or is even relatively big, I would just stay away. I wouldn't trade that. Heck no. There's way more stocks you can trade out there with smaller spreads. And again, I don't follow this, so there may be something I don't know about this stock, right? I don't know everything. But based off of what I'm seeing, I myself would never trade it. If alone a $23 stock has a $7 spread, whether or not it's pre-market, that's pretty ridiculous. Most spreads do tighten up. Hold on. Okay, so let me mark that off there. Ooh, geez, Connor, what are you doing, bud? There you go. So you go, mark that spread difference between bid and ask. The spread's $7. Sure, most of the spreads usually tighten up by the time the market opens, but a $20 stock has a $7 spread. I don't even know why that's the case. So again, I don't follow the stock, but if I had to take first glance, I would not trade that based on the spread. Based on the technicals are even saying that we're right at resistance. So I would be a little hesitant right now on that. I probably wouldn't even trade it, to be honest. But again, that's just my personal viewpoint on that. OCLR. Okay, OCLR, pretty choppy looking. All right, so you can see here, see that top to this bottom, and let me draw a line. So you can see that it came down and bounced right off that previous pivot point there. So it is on like maybe some support, but it's a low volume traded stock. Probably wouldn't trade that. Most likely better stocks out there to trade than this for right now. And not to mention, if a chart's doing this, gap down, gap up, come down, gap down, it's not a reliable stock chart to trade. F, so Ford, Ford's curling over, heading down, probably based on earnings. Was it or is it not? Yup, dividend payout. Okay, so to me, this kind of looks like a dividend sell-off, right? Everyone received their dividends and then they just dumped the stock right now. So I don't know. I mean, I don't really trade Ford. Ford doesn't really do anything. But that's kind of what it looks like. It kind of looks like maybe the earnings happen? Earnings haven't happened, but they did just pay out dividends. So I could see this as short-term traders retaining dividend payouts and then dumping their shares. That's kind of what I see that as what's happening right now. Let's see, TRXC. TRXC, pretty low volume, choppy looking chart. It's arguable though, arguable that this could be breaking out soon, right? You have this pattern here, right? It's trending up. It's starting into like this flat top, right? So, it's very arguable that if the price action trades into here, into this corner, it could go pop, right? That's arguable. But again, the only way that's going to happen is the only way this is really going to pop or have a reliable, strong pop and trade is if this volume here back then starts happening here. And as you can see, there is no volume. So probably not the best trade on that. What's the next? ENPH, we talked about this in our private group earlier. So, oh yeah, it's a good, actually, you know what? I'm glad you said this because I actually wanted to mention this earlier. I just forgot about it. So ENPH, this is pretty good. So ENPH, if you zoom in enough, some would argue that this is a bull flag, right? Some would argue that. I kind of think it is a little bit, not entirely, but so far it is going through a dip buy here where it's getting bought up. So what you have to be careful of is it's possible that this is going to come up and put in a lower high and then go that way, right? So what I mean by that is, right, it could come up, right? So the price action could come up and stop, and then it puts in a lower high, right? So then we could actually draw a trend line down, and then it would probably start performing into a descending triangle pattern. And then ideally that descending triangle pattern overall is a bearish pattern. But for being a stock that was 65 cents to go up to, you know, $1, then to go up to $3, then to pull back and then go up to $5, that shows that people are interested and there's a steady volume increase. So volume has steadily been getting bigger, which, you know, could, you know, say that there might be value investing taking place. So let me actually pull up FinViz real fast. Let me take a look here. ENPH. Take a look at their fundamentals. So fundamentals are saying that they have 336 employees. Their income right now is negative. That's not good. Sales is pretty good. Market cap. So it's a higher market cap. So you can't really consider this a penny stock. Or sorry, you can't consider it a low cap stock. Wait, hold on. Yeah, that is a low cap stock. What am I talking about? So it is a low cap stock. They don't have a PE ratio yet, so it's kind of hard to determine. They don't have a price per, you know, a PB ratio yet, so that's hard to determine. They don't have a debt equity ratio yet, so that's hard to determine. So far, return on assets is negative, ROI is negative, gross margin's not bad at 19%, operating margin's not good, profit margin's horrible. Though they're up big, right? That's not a good sign. Not to mention institutional ownership is actually pretty high. Insider transactions down by 10%. So yeah, this could be, and I don't know what they do. Are they a biotech? I have a feeling they're a biotech. Let me see. No, they're an energy company. Okay. So I don't know. I don't know. It seems like there's a little bit of value investing taking place, although a lot of their, let's see, how long have they been around? That's another good question. So they've been around for a while, and they still don't have necessary fundamentals in place. So I don't know. Guys, I really don't know. It looks like value investing taking place. Over the past 3 years, we're starting to see the most volume the stock has really seen, at least most buying volume over the past 3 years. So it's interesting. Maybe keep it on your watch. That was what I would say. Keep it on your watch. Might be a good thing to watch there. All right, so let's see. So again, that's all I got for you guys here today. So hopefully that helps kind of pick some things out. Ooh, FCB. Actually, I'll take a look at that because I haven't looked at that. I meant to watch that stock. FCB, 1 year day. Yeah, watch FCB, guys. Yeah, seriously. I mentioned this a couple weeks back and I forgot to keep an eye on it. But like I said, this might be performing into a perfect cup and handle pattern, which would be a long bias trade. All right, so watch that possibly. But again, that's all I have for you guys here today. So I hope that helps answer some of your guys' questions. So again, it's Friday, so I'll see you guys all for another pre-market watch list come Monday morning. You can always join our private group and things like that. Just make sure to check out the description box. And if you do join, make sure to use coupon code PENNYSTOCK15 to receive 50% off. Other than that, I'll catch you guys all on Monday morning. All right, stay green.